In this video, we review 3 potentially bearish setups in 3 different time frames. If you'd like to watch this video in full screen mode, you can click in the lower right-hand corner of your video player. We'll be reviewing 3 different head and shoulders patterns. We refer to them as bearish setups for a reason. A head and shoulders pattern does not become potentially bearish until the neckline is broken. The identification of a pattern in and of itself is not bearish. So therefore, we are not making any bearish calls here. We're simply pointing out there are 3 head and shoulders patterns on 3 different time frames that are important to be aware of. They can help us make contingency plans in terms of answering the questions, what would I do if the S&P 500 dropped to 1280, 1120, or 1050? To improve the clarity of the charts and the resolution on your screen, use this button in the lower right-hand corner of your video player. Since more people are interested in the S&P 500 rather than the Vanguard All-World Index, we'll show the targets for the S&P 500. Just wanted to make a point that the patterns are cleaner on other indices, such as the Vanguard All-World Index. And the point being, if the patterns execute on this chart, which is a global stock market chart, the S&P 500 would probably be weak as well. A classical pattern has a left shoulder, a higher head, and a right shoulder that is lower than the head. I can find 3 of these patterns on VEU. This is one of them. Here's the second one, shoulder, head, with the right shoulder being lower than the head. Here's the third pattern that's in play now. It's a little difficult to see. Here's a shoulder here, a higher head, and a lower right shoulder relative to the head. Again, the charts for the S&P 500 aren't this clean, but we'll use the S&P 500 as an example since more people are familiar with it and familiar with the levels. We're looking at a daily chart of the S&P 500 index as of the close on July 25th. This pattern is in play currently. There's a shoulder, here's a head, here's the right shoulder. This is the neckline here. The way these patterns work, if you get a clean break of this neckline, this blue line here, and the pattern executes, the target would be roughly projected down to 1280. So keep in mind, if this pattern were to execute, we get a clean break here and we hit 1280, then we would potentially knock off another head and shoulders domino. If we came down to 1280 here, that means price would be coming in this region here. You can make an argument that this is the left shoulder here, this is the head, and we're currently forming the right shoulder. This would be the neckline here. Your target in this case, if this pattern were to execute, is 1120-ish on the S&P 500. The potential target from the previous head and shoulders pattern was 1120, which is here. If price were to move down to 1120, then theoretically you would also have broken this neckline here that goes all the way back to 2009. Here's your left shoulder, here's your head, here's your right shoulder. The target in this case projecting down is this orange line that would take you somewhere in the neighborhood of 1050 or towards this area of support here below this head and shoulders pattern. As we mentioned at the opening, a head and shoulders pattern in and of itself is not bearish. Here's a shoulder, here's a head, here's a shoulder. It never executed. If it doesn't execute fully, it doesn't mean it's bearish. There's several times over the past few years you can make a case that this is a shoulder formation, this is a head, and this is a shoulder. So again, emphasizing the fact that these patterns are here really doesn't mean a whole lot other than we should be aware of them and understand that if the necklines are broken, the probability of seeing further declines increases. Here's another example of a pattern that did not execute. You can make an argument that this is the left shoulder, this is a head, and this is the right shoulder. We never came down and broke this neckline, which could indeed be the case here. This is the present day here. We remain in a clearly established uptrend and have not, as of July 25th, even made an important lower low yet. Here's the neckline here around 1300. If we were to violate that, then it's possible a drop towards 1120 would. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.